Taylor Riggs in San Francisco. This is Bloomberg Technology. Coming up in the next hour, Blacklisted. Stocks fall after China vows to retaliate to U.S. export ban. We have the latest on Chinese tech caught in the middle of the trade fight. Plus, Facebook in trouble. Attorneys General met with federal agencies Tuesday, adding pressure to probes into advertising and competition. And is it fitness or tech? After Peloton's 20% drop since its IPO, we look at another company with its eyes on connected fitness. The CEO of Mirror joins the program. But first, to our top story. It's all about the continuing escalation of the U.S.-China trade war. U.S. markets closed lower on Tuesday. This is as Bloomberg learned that the Trump administration is discussing possible restrictions on portfolio flows into China. That includes a particular focus on investments made by U.S. government retirement funds. Joining me to discuss, Bloomberg's stocks editor, Dave Wilson in New York. Dave, start with just talking to me about the sell-off that we saw a little bit today. How much did China play a role in this?
Well, they certainly played a role to the extent that if you look at Chinese companies that trade here in the form of American depository receipts, you know, they took a hit. I mean, we're talking about online retailer Alibaba Group Holding down about 4%, their rival JD.com down about 4%, you know, the search engine Baidu lower by about 2%. And beyond that, we started to see how the back and forth between the U.S. and China is showing up in terms of individual companies and industries. I say that because three biggest declines in the S&P 500 today were lab equipment companies: Waters, PerkinElmer, Thermo Fisher Scientific, all down more than 6%. You had this Dutch company, a competitor of theirs called QIAGEN, come out and say their third quarter sales growth didn't measure up to their own forecast because of weakness in China. So that's one piece of it. Another piece, the chip maker Ambarella, maybe best known as a supplier to GoPro, but one of their biggest customers is China's Hikvision, which happened to be put on the U.S. blacklist yesterday. So you saw those shares take a hit as well. Ambarella down about 9.5% today.
Dave, I like that you talked about the blacklist because that was along with another story that we were following about the U.S. talking about restricting some of the flows into China. I'm showing a chart here on my terminal, and it's all about the foreign direct investment into China. And I wonder if this comes as you've still seen a lot of investors go in. If the U.S. stopped buying Chinese companies, would they really be hurt?
I mean, they would be hurt to the extent that you would lose sort of an investor base. And bear in mind that, you know, according to our current reporting, they're talking about U.S. government pension funds specifically. I mean, not even necessarily state funds or private funds or the wider range of institutional investors that put their money into the ADRs of Chinese companies. So, you know, it's looking relatively limited at this point, but it's enough to kind of suggest, if nothing else, that the trade issues, you know, going back and forth between the U.S. and China, well, it may be more of a challenge to get those settled when you now have the question of, you know, financial flows as part of the mix.
You've been covering this story. I want to show you another chart here in my terminal. It's all about the companies with exposure to China that get a lot of their revenue from China. They've been underperforming as well. Do you continue to see this trend, Dave, where if you have exposure to China, you can just assume underperformance?
Well, I mean, we've certainly seen that with QIAGEN as an example. I mean, we've got third quarter earnings coming up really in the next couple of weeks, and we'll have a pretty good idea by the time you get results, you know, thinking about a company like Caterpillar or say Boeing, you know, the automakers perhaps. I mean, there are a lot of companies that do a substantial amount of business in China that are going to be laying out their results, and you'd have to think there will be more examples like QIAGEN and more reactions like we saw in the U.S. lab equipment stocks. It's just a matter of time.
Bloomberg's Dave Wilson, thanks for joining me. And U.S. scholars are calling for more cooperation with China. That follows Washington's decision to blacklist some Chinese tech companies over involvement in alleged human rights abuses. Daniel Rosen, he's the founder of Rhodium Group, says there will be collateral damage to other companies. Rosen spoke with Bloomberg's Mike McKee at the NABE conference in Denver, Colorado.
This is obviously affecting those companies, their ability to maintain their financing, their contract relationships, their place in other people's supply chains, right? But there's probably hundreds and hundreds more companies that have similar profiles in one way or the other. They're also thinking about whether this could spill over to them. So, there's a fairly hefty chunk of high-tech activity here that's been implicated by this move. And I think it's going to take a little while for people to sort it out. But it's going to create some collateral damage, I think, here. I think one major drone manufacturer that was interestingly left off the list. But for the most part, it's covering most of the names people thought might be pulled into this.
Now, how does that affect U.S. companies? Do we see a spillover effect? Can they replace the business? I understand also that maybe they can use overseas subsidiaries to go around the sanctions?
Yeah, I mean, and folks have been doing this in the trade space, right, for the past several years already. So thinking about how you can legally, appropriately skirt some of these risks by using your overseas operations as a buffer against the injection of new policy regimes that are frankly untested. And so part of the risk and uncertainty is that nobody knows how these things exactly are going to be enforced, what's an adequate compliance, what kind of expectations are going to be from the Bureau of Industrial Security or whomever at Commerce Department is responsible to oversee these sorts of things. But there's absolutely going to be an effect both on who American firms are using as suppliers, and also, let's not forget, there's almost certain to be some kind of reciprocal retaliation against American firms from the Chinese side.
Yeah, what kind of retaliation do we expect?
Well, I mean, interestingly, we also had another story this week that you want to talk about having to do with finance flows, right? And we've seen China already threatening to retaliate against Chinese investors putting money into U.S. government-related finance vehicles. But likewise, China has an unreliable entities list that is sort of analogous to the entities list that Washington is maintaining, threatening to put American technology companies onto that list on the grounds that they're going to be influenced by American political considerations and not just market considerations. Can China really live without those firms? We'll see. Probably an open question. And a lot of those Chinese companies are going to have to scramble to figure out what this means for them. I don't think anybody really knows off the top of their heads.
Well, the story you mentioned that Bloomberg was reporting that the Trump administration is still talking about capital controls of one form or another on China. Can that work?
You guys have done a great job on this story for about 3 weeks now since it first started to cook up. And there's an aspect of this which was to be expected and is sort of, if you think it's important to have the degree of disengagement or decoupling in trade terms that we've already sort of normalized and made a legitimate part of discussion, then it's kind of natural to at least do an inventory of what kind of financial flows there are between the official sectors, right? From U.S. into China and China into the U.S., right? That doesn't mean there's necessarily going to be action. I think people need to do a careful stock taking and do the math before they think about what the policy options might be. Definitely there are some folks outside of the White House that have wanted to jam this into the Oval Office and make this part of the conversation before the president, before the White House is ready to really put this at the center of the table. Certainly there are some hawkish folks inside the White House that would like nothing but to add additional elements to the disengagement party that's been going on the past couple of years. There's finance, additional sanctions actions having to do with whether it's Iran stuff or North Korea or what have you. There's plenty of more things that can be thrown into the mix, and there are definitely some people on the inside that would like to see that happen.
For people who are watching the whole trade dispute between U.S. and China, one of the frustrations has been trying to figure out exactly what Donald Trump wants. But from the Chinese side, what is it that Xi Jinping wants? What's his motivation now?
Well, the answer used to be easy: stability, right? He wants stability, time for China to consolidate its economic transition, the party's ability to control and manage risks at home, and to hold at bay any kind of shocks that are outside of the ability of the government and the party to manage and control. The problem is we're now at a point where stability is no longer an option.
That was Daniel Rosen, founder of the Rhodium Group, speaking with Bloomberg's Mike McKee. And Samsung Electronics posted quarterly earnings that easily beat estimates. There was strong demand for the South Korean company's new Note 10 smartphone. Samsung was also helped by the debut of the new iPhone 11 Pro. That phone uses Samsung's digital display screen. And coming up, U.S. states probing Facebook over advertising and competition met with top DOJ antitrust officials on Monday. We have the story next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. We have some news crossing the Bloomberg terminals that the White House is saying that President Trump will not participate in impeachment probes. Again, the White House saying that President Trump will not participate in impeachment probes. We will bring you more headlines as they come. Now, on Monday, New York Attorney General Letitia James met with top antitrust officials in Washington to discuss a multi-state antitrust probe she is leading into Facebook. The meetings raised the prospect that the states could join the federal investigations, similar to the way states collaborated with the U.S. antitrust case against Microsoft in the 90s. To discuss, I'm joined by Bloomberg News reporter Ben Brody, and with me here in San Francisco, it's Bloomberg's Kurt Wagner. Ben, let me start with you. Do we know what was discussed in these meetings today?
Well, the emphasis that the attorneys general who participated put out was that they were especially talking about consumer data, which has been a huge problem of theirs, as well as the antitrust case generally about social media. It doesn't give us a ton of detail into what they're looking at, but it is interesting that it sort of straddles a series of interests. The DOJ is particularly interested, we believe, in the aspects of consumer data that play into antitrust, whereas the FTC is looking into digital advertising and mobile apps. So it seems like they were all discussing their probes, and what exactly they're going to do in terms of teaming up is sort of what we're watching from here.
And Kurt, it's hard to imagine that this litigation and these probes are not the biggest business risk facing Facebook right now.
Yeah, I mean, to hear about the data stuff and the advertising, I mean, they're one and the same. This is Facebook's bread and butter. They make 99% of their revenue from advertising. And so if you're looking into Facebook from a data collection standpoint or from a targeted advertising standpoint, it's one and the same. And so I don't know how these agencies are going to break this up. Maybe Ben knows more than I do, but I just feel like this is going to get really muddy really quickly.
Wow, good segue. So Ben, talk to me again about all of these different probes. You have state, you have federal probes, some are privacy, some are antitrust. Are they all working together on one probe, or are these all segmented?
For right now, what we can tell is they're fairly segmented. It's common for all of these agencies, as well as the states, to be having conversations even if they're not officially working together. It is entirely possible, we believe, that we could see one FTC probe, one DOJ probe, which is a particular interest of Attorney General William Barr, and then all of these states, we believe there's a couple dozen of them right now, which is more than the 8 that we were looking at before. They could all be moving along separate tracks. They could all come together. They could come together in different combinations. Usually if they do, the federal agencies would lead. But right now we think it's pretty interesting. DOJ and FTC have literally been talking about turf battles and squabbles pretty publicly, especially on Facebook. So I think it's entirely possible that Facebook will have to deal with an array of these, which is in some ways even more difficult than just one of them.
Yeah, how much of a game changer is it if they do all come together and it's a targeted? I'm thinking Microsoft circa 1990s.
Right. Well, in some ways, the power of Microsoft in the 1990s was actually that the states and the federal agencies were able to come together for a time and do their document review, pursue their theory of harm, litigate in court, but they were also able to split apart at some point, and the states were able to say, hey, we actually want more than this when the DOJ eventually pulled out under the George Bush administration. And so the power is that sometimes they can come together and combine forces, but sometimes they're actually able to split and attack from multiple different sides. And I think that's a real danger for Facebook here.
Kurt, we talk about this every day. Have we heard yet Facebook's response to this?
Yeah, it's been pretty consistent for some time now, which is that, Facebook being big is good for Facebook and it's good for tech because they are able to, fight off all of these issues that people keep bringing up, election interference, hate speech, stuff like that. So from a should we be broken up standpoint, that has been their party line. Now, when you start talking about advertising or data collection, Facebook has rolled out a bunch of different things since the 2016 election around what they collect and how they let people know about what they're collecting. And I think from an advertising standpoint, their argument is going to be, we run an ad auction. We let advertisers bid on, how much they want to spend on each ad, and as a result, how could we be inflating prices if they're bidding against each other?
Well, a great segue, because you talk about ads. You're one of the hardest working people here. So you've also just come out with a story about Twitter, saying that they've used now phone numbers for ad targeting. So far, Twitter had stayed out of all of this regulatory scrutiny. Where does this now put Twitter?
Yeah, it's not great. And so this is a little bit complicated, but when people upload private information for security reasons, for example, if you have two-factor authentication to protect your account, you might give Twitter a phone number or an email. And the expectation is that that is kept strictly for security. But what we found out today is that Twitter was actually using those emails and phone numbers to target people with ads. So they were using the security information to make money. And they admitted that today in a blog post. It just came out right before we sat down, so it's still pretty new. But this is the kind of thing that Facebook was doing, and it was one of many things that the FTC said you have to stop when they settled their $5 billion privacy settlement this summer. So there will be regulators asking questions about this, I'm sure.
Okay, well, wonderful. So many other questions that we'll have to get to another time. That was Bloomberg's Ben Brody and Kurt Wagner. Thank you both for joining me. And coming up, real and urgent. That's what 5 Republican senators are calling the threat from Huawei. We discuss the back and forth between the U.S. and Microsoft on how to handle relationships with Huawei next. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology. Be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg. Wanted to update you on a headline that I had mentioned earlier. In an 8-page letter laying out the White House's concerns about the impeachment inquiry, the White House counsel says President Trump will not participate in an impeachment probe. The White House counsel writing, "You've designed and implemented your inquiry in a manner that violates fundamental fairness and constitutionally mandated due process. Put simply, you seek to overturn the results of the 2016 election and deprive the American people of the president they have freely chosen." Now, switching to another story we're following, 5 Republican senators told Microsoft that the threat from Huawei is, quote, real and urgent. This comes after one of Microsoft's top executives complained that the government had not been open about why U.S. companies should not do business with the blacklisted Chinese telecommunications firm. To further discuss, I want to bring in Bloomberg Technology's Garrett DeVink. Garrett, what does real and urgent mean?
Real and urgent. I mean, that's sort of the characterization that, these senators who are sort of more on the hawkish side. And of course, the U.S. government, sort of officially, the U.S. security kind of establishment has looked at Huawei as a company that they really don't want to be doing business with, that they would rather their allies around the world not do business with. And that's, of course, because this company is very closely connected to the Chinese government. Many of its founders, executives are former Chinese military personnel. And so there's this sort of view that Huawei is very closely connected to the Chinese government and could potentially, spy on other countries through Huawei technology. That's the view of the U.S. government.
And Garrett, we got our hands on the letter, and I wonder, as you read through it, what were the specific allegations?
Yeah, I mean, I don't think anything in the specific letter were brand new, and the senators actually referred to a lot of information that they said was already public, and like I said, this is something that's kind of been going on for a while. And the original incident that sort of prompted this letter was Microsoft's Brad Smith, who's, you know, one of the more outspoken technology executives out there, said, look, like, we, you know, respect the government's position, but we don't really understand specifically, you know, the top secret things that they're really referring to. And this letter doesn't refer to those top secret things. It just reiterates the stuff that Brad Smith already knew about when he made this complaint in the first place.
You know, Microsoft had complained that the U.S. government officials weren't open enough. Now that they have this letter and they have the specific claims, what can Microsoft do? They still can't do business with Huawei. How does this help them?
Yeah, I mean, I think that this letter is more sort of on the political side of things. You know, the senators are always sort of positioning themselves as very, you know, strict proponents of, you know, U.S. interests, and they want U.S. technology companies to kind of fall in line. There's also been criticism of Google for, you know, having an AI research lab in China and saying, you know, do you want to support the future of U.S. AI or Chinese AI? And the companies have been clear that, you know, we're U.S. companies, but we're also global and we want to work around the world. And so I think that the political view of the U.S. government and these senators in particular is sort of a little bit more hawkish than these technology companies are comfortable with or would want to be in. And in an ideal world, they want to sell a lot of stuff in China. They want to work closely with China as, you know, a very, very important and rising country. And so they're sort of at odds at the end of the day with the U.S. government. But so far, they're definitely going to follow the law. They are based in the U.S. and they're going to follow what the U.S. government tells them to do.
Well, and with this letter, you could claim that the U.S. government officials are doing their part in attempting to be more open and transparent. Does this satisfy the likes of Microsoft and other tech companies who wanted to work with China and Chinese companies like Huawei, at least for the time being?
Yeah, I mean, they haven't really said anything about it. I don't think, you know, Microsoft is going to say much more about this. But I don't think that it's particularly satisfying. I think, you know, the companies at this point, after, you know, months and months and months of this fight with Huawei, are realizing that, look, like, you know, they're not going to be able to deal with this company. They're going to have to curtail their efforts to work deeper and deeper into China and maybe hold out and hope that, you know, the next U.S. government is actually more open and to sort of going back to working closely with China. But we'll have to kind of wait and see. Of course, we have an election coming up. You know, Donald Trump could win again, and it's unlikely that his position will soften on China even after that election.
Bloomberg Technologies, Garrett Devine, thank you for joining me. And coming up, back to the blacklist. The U.S. claims China AI companies are human rights abusers. What being banned from doing business with U.S. companies will do to them at home. That's next. This is Bloomberg. Bloomberg Technology, I'm Taylor Riggs in San Francisco. Now back to our top story. It's all about the latest in the U.S.-China trade war. A day after the Trump administration blacklisted 8 Chinese tech companies over alleged human rights violations, China is signaling it will hit back. A spokesman for China's foreign ministry said, quote, "We urge the U.S. side to immediately correct its mistake, withdraw the relevant decision, and stop interfering in China's internal affairs. China will continue to take firm and forceful measures to resolutely safeguard national sovereignty, security, and development interests." Joining me to discuss in Los Angeles, Bloomberg trade reporter Sarah McGregor, and in studio, Shelley Banjo, who covers China tech for us. Sarah, let me just start with you and this blacklist. Is this part of a broader trade strategy?
It definitely begs the question whether it is part of the Trump administration's trade strategy to sort of increase the leverage, to ratchet up the leverage. As we know, a similar blacklisting to companies like Huawei, while they're not part of the official trade discussions, they always sort of end up in the mix. And it seems like Trump holds them out as a bit of a carrot to say, oh, I can go easier maybe on Huawei. I can allow these companies to start doing business again on some level, if you give us this and that. So I think it does come at a curious time with these trade talks resuming for the first time since July between high-level officials in Washington on Thursday and Friday. But it might backfire. It could actually serve, I think, to anger the Chinese, to kind of sour the mood ahead of these talks as well.
Well, and Shelley, if anything has been a carrot dangling, it has been the tech sector. Why do we target the Chinese tech sector?
So AI is an area where both the U.S. and China are quite competitive. It's obviously very important. All sorts of these companies are the leaders in AI and facial recognition, like MegV, SenseTime, Hikvision, and so these companies do present a threat, a big competitive threat to the U.S. And so the U.S. administration is saying, we have leverage, as Sarah said, that we could do something about it.
So, Sarah, you heard Shelley mention AI. Does this seem like it's more of an AI issue or a human rights issue?
Well, that's also what's interesting. Previous companies from China have been added to this trade blacklist, which restricts U.S. companies from doing business without the Chinese firms unless they have, a special access from the Commerce Ministry. And so previously, it's been about national security concerns. It's perhaps that these companies might have close ties, according to the U.S., with the People's Liberation Army, or have done things where they think they could be open to espionage in the U.S. In this case, with the restrictions that came yesterday, it's about human rights concerns, the mass detention of these Muslim minorities in China, and so this sort of opens up a new front too in the trade war, where I think national security, the U.S. saying it's doing something in its own interest is one thing, but to now criticize China over its human rights record and restrict Chinese companies' business in the U.S. on those grounds, that opens up a new can of worms.
Shelley, a colleague over at Bloomberg Opinion, Tim Colpin, wrote a column on this and saying of all of these 8 specific companies, 2 that he's really focused on, MegV Technology and SenseTime Group, because they target AI. What do we know about these specific companies?
Yeah, these are the leaders in AI and facial recognition. So SenseTime is the world's biggest AI startup. MegV just filed preliminary papers to do an IPO. So they're clearly the leaders in China, but also globally. And, they've definitely sent worries across the U.S. to say, could these companies rival U.S. technology companies in the U.S.? Could they be collecting data from people in China, people around the world that, could become a threat to the U.S. going forward?
And Shelley, how does China respond to this?
Well, both companies, MegV in particular has come out and saying, we are doing nothing wrong. They have said that we are not in the Xinjiang region of China, which is what the U.S. authorities are saying, where the human rights atrocities have occurred. So, they're trying to say, let's keep it to business. We don't know why we're on this entity's list. We don't belong. We don't belong here, and that is kind of what has riled up China, saying, this is clearly a bigger issue. This is a political issue. You're starting to infringe on our sovereignty, and we don't want the U.S. meddling in our own business.
And Sarah, this is eerily reminiscent of the Huawei ban. Any thoughts as you look to how Huawei's ban has unfolded? Any sort of takeaways for this situation here?
Well, I think that, the Huawei case shows us there's really just no guarantees. Trump did say months ago that he was going to allow, on a case-by-case basis where there were no national security concerns, for U.S. companies to start doing business again with Huawei. They put in their applications, and these companies are still waiting, and they're still begging the Trump administration, saying, in the meantime, Huawei's still doing business with our competitors in Europe or other places where they don't have these restrictions in place, and we're losing ground. We're not making that money we need for investment and research, and that in itself is a national security risk. And so I think, what lessen these companies now that deal with the new Chinese firms that have been put on this list is, don't hold your breath. If you think that there might be some loosening of restrictions at any point in the near future, you might want to think twice, because the Trump administration seems to really be serious about this campaign for blacklisting these Chinese companies.
Well, and Shelley, as the Trump administration has shown that it is really serious about this, you've seen Chinese tech stocks get hit much harder. I mean, I'm taking a look here at a chart for our Bloomberg viewers that we have pulled up in the terminal, and it's the Chinese Tech ETF minus the U.S. Tech ETF, and it shows major underperformance in these heightened periods of trade tensions and volatility. As you've been covering the tech sector, do you just assume that that underperformance of Chinese tech continues?
Yeah, they're definitely facing a lot. There's weakness at home. There's consumer weakness in China, but also a bigger picture, which is, what's the future for some of these companies? And SenseTime and MEGV, which are on, the two of the latest on this list, they're not publicly traded, but they both have aspirations for an IPO. And if they're going to be on this blacklist from the U.S. and cordoned off from an entire huge market, you have to wonder what investors are going to want to continue putting money into them or buy their stock if they eventually go public, or whether or not they'll even be able to do an IPO or not.
Well, we'll have to wait and see. Bloomberg's Shelley Banjo joining me here in San Francisco, and Sarah McGregor. Thank you both. Now, international companies have found themselves embroiled in the middle of a controversy surrounding free speech in China. The latest, gaming company Activision Blizzard banned a player and rescinded money for supporting protests in Hong Kong. Here with more on how these companies are finding themselves involved in international politics is Asia Society Senior Fellow Isaac Stone-Fish. Isaac, thanks for joining me. And to get us started, just talk to me broadly. What are your thoughts on companies punishing employees for speaking out?
I think it's wrong, and I think that American companies have long been criticized for only aligning their values with maximizing shareholder profit, or in trying to find a way to best serve the investors, and really not paying attention to the employees of their own organizations. I think the other problem with it is that American companies do not need to yield to the Communist Party's way of doing things to succeed in Beijing. So I think we're seeing, hopefully, the beginning of a value shift on how American companies deal with their Chinese partners.
Isaac, talk to me more about why you think they don't have to yield to Beijing, because it feels to me like they're caving to pressure simply because they need to operate in China, because that's where future growth is for both the top and the bottom line.
Certainly, there's huge opportunities in the Chinese market for a lot of American companies. The issue is that what has happened in the past is most American companies have done this, they have caved, and I have not seen any appreciable difference between the American companies that have caved and the American companies that haven't caved. There are plenty of examples, though most of them are quiet and fortunately not going to go into them publicly, of American companies who have been able to say, hey, I'm sticking with my values, I'm sticking with my guns here, and for their business in China to not recede. I think the other thing that we're going to start seeing, and which I certainly hope that we start to see, is more coordination among American companies about how they can protect the freedom of speech of their employees together. We've seen that with universities, which also face pressure from Beijing. We saw it with the University of California system, where one of their institutions invited the Dalai Lama, the Tibetan spiritual leader, to come speak, and Beijing tried to punish them, and all of the UC schools stood together, and it mostly worked out for the UC system.
Isaac, if we don't get that type of collaboration, what is the potential American backlash of seen as imposing on free speech?
I think that's a really good point. I think the other importance of doing this is so that, I mean, as anyone who's scrolled through Twitter in the last few days have seen, the backlash against the NBA and Blizzard, and news just broke about ESPN, the sport network, also trying to suppress views that are in a way critical to the Communist Party. The backlash is being really huge and really significant here, and that's going to have real financial implications for American businesses in America as well. So I think the other piece of this is these companies need to have a foot in the American market when they're thinking about what they're doing in China. The NBA did something a little cute over the weekend by putting out two different statements. Its statement in English was far more mild, and its statement in Chinese was far more conciliatory towards Beijing. And people can read both languages, and those things are going to get translated and get viral on the US side.
Seems like a lot of lessons still to be learned. That is Isaac Stonefish of the Asia Society. Thank you for joining me. And coming up, looking in the mirror, how one tech startup wants to get you fit in your living room. We speak to the CEO and founder of Mirror next. This is Bloomberg. It's a battle of the exercise bikes. Peloton is suing competitor Echelon Fitness. It accuses its rival of flooding the market with cheap copycat products while trying to undercut Peloton with false advertising. No response yet from Echelon. Peloton went public last month. And speaking of the boutique studio fitness market, another startup in that space is making news today. Mirror. It's the interactive mirror that lets users stream live and on-demand workout classes at home. It launched a new feature on Tuesday. It's one that will allow customers to take classes with a personal trainer. Joining me to discuss in New York, it's the founder and CEO of Mirror, Bryn Putnam. Bryn, great to have you. Talk to me first, given it's such a competitive space with this connected fitness market, is personal training the way you really want to stand out?
I think absolutely. So for us, we're really interested in ways that we can add increased value for our member base, and the ability to give our member base personal training on demand in their homes at a fraction of the cost of a regular personal training session that they would have at a gym is really a compelling offer.
And Bryn, the $1,500 price tag for the Mirror caught my attention because it does just undercut Peloton's bike that starts around $2,000. Is that also the goal?
We're certainly interested in being able to bring top quality fitness to people at a price point that is affordable. We offer financing for as low as $42 per month, and our personal training sessions are just $40 per session, so really a fraction of what you would pay at a gym.
Okay, so talk to me more about that recurring revenue, that monthly subscription, because we know a $1,500 mirror or a $40 training session isn't enough probably to satisfy investors. What is that recurring subscription?
Right now, our members pay $1,500 for the Mirror, and then they pay $39 a month for up to 6 members. So you, your partner, children in your household can all enjoy unlimited live and on-demand classes for just $39.
Bryn, we've learned a lot of lessons from Peloton. They said we're a tech company, and then they came to market. They fell 20% since the IPO because the public market said, nope, you're a fitness company with a lower valuation. Are you tech or fitness?
I think that the Peloton fluctuations in price are really showing us that the market doesn't like uncertainty, and it really is challenging to neatly put Peloton into a single business category. Are they an e-commerce company that sells bikes? Are they a SaaS company? Are they a media company? This is something that we are really acutely aware of, which is why we are focusing on ways to add value to our baseline subscription through additional premium content, starting with personal training. So that enables us to not only add increased value for our current already engaged member base, but also to reach new segments. And with this addition, we also have the ability to add on new types of content onto our baseline offering. So in the not so distant future, you'll be using your Mirror not just for fitness and personal training, but also for fashion, beauty, and telemedicine.
Have you felt increasing pressure in the last few months to be profitable?
I think that both public and private markets value both strong growth as well as strong gross margins, and I think we are acutely aware that in order to be really a sustainable business, we do need to have both growth and strong unit economics.
And talk to me about concerns over corporate governance. Companies like WeWork were really scrutinized. Have you gotten increased pressure over your corporate governance practices?
I mean, I think there is certainly a lot of capital available in the market, and I think there are also a lot of VCs who are really interested in giving companies the right amount of capital at the right amount of time. And I think it's our obligation as founders to ensure that we are not overcapitalized and that we are being fiscally responsible. So I think for us, that's something that we are acutely aware of, and we are interested in building a business for the long haul.
You talk about companies being valued with strong future growth opportunities. Where could we see you next? Just a mirror or some other products to look forward to?
We really are focused on building a dedicated channel into the home as well as original content. For us, Near really is our flagship product, and we grow by adding new and exciting types of content onto our platform. So in the not so distant future, you'll be able to use your Mirror to meditate and then look for other non-fitness verticals launching soon.
Mirror CEO Bryn Putnam, thank you so much for joining me.
Thanks for having me.
And still ahead, we continue our conversation on the U.S.-China trade tensions heating up. We talked to U.S.-based tech company Tile on why manufacturing its product in China, it's becoming a problem. That's next. This is Bloomberg. Microsoft upgraded to a buy at Jefferies with a price target of $160 a share from $93. Analyst Brent Thill sees Microsoft as one of his top picks and believes there's a clear line of sight into double-digit revenue growth given its large and diversified size. Cloudflare's mission to build a more secure and reliable internet hasn't been enough to charge up the Wall Street bulls. Technology analysts issued favorable remarks Tuesday as the post-IPO quiet period ended, but they showed weak support for the stock as price targets implied limited upside. And Susquehanna derivative strategist said to buy eBay January call options ahead of potential fourth quarter catalysts, specifically the strategic review around potential asset separations. He believes a long call strategy is warranted given the risk-reward profile. Now, I want to get back to the main theme of the hour, and that is continued trade tensions between the U.S. and China. One company feeling what many U.S.-based companies are, Tile. It creates devices connected to a mobile app, helping users locate their personal items. Tile manufactures a significant portion of its product in China and continues to monitor manufacturing and fiscal environments to maximize its opportunities. To discuss, I'm joined by Tile CEO CJ Prober. So question of the day has to be how the trade fights are impacting you.
Yeah, great question. And maybe a little context for why this is so relevant today. We launched 4 new devices today. It's our best lineup ever. And it's headlined by a new sticker product that really addresses like a much broader set of use cases that our customers have been asking us to address for them. And so because we manufacture products and we do a lot of that in China, the trade wars and the policies there are impacting us. So we are subject to tariffs. Those went into effect on September 1st. We do support the policy, but one of the challenging things for companies like ours is we didn't have a lot of notice that the tariffs were going into place. I think we had 4 weeks notice. And so while we support the policy, when you think about building product leading up the holiday, we just didn't have a chance to react.
Well, and one of the things we've heard from companies like Apple is their elasticity of a supply chain. They need 2 quarters to move manufacturing. What's your leeway? What's your leg room?
Yeah, it does take time to shift the supply chain. If you think about a business like Tile, we've started in the US, now we're a global business. We're selling in well over 40 countries. We have, our community expands kind of across the world. And when you have complexity like that, we're in 40,000 retail doors. We're growing like crazy in Japan. Last quarter in EMEA, we saw 160% growth. You need a supply chain that meets the needs of both like retail customers, distribution customers, and then we have a big direct business as well. And so selling into those direct customers. So there's a lot of complexity, and so making moves takes time.
And have you started moving manufacturing in those places?
No, we're basically viewing this as an opportunity. As I said, we support the policy. So now we're taking the chance to reshape our supply chain in a way that serves our customers best, both, again, direct customers and then retail customers.
So you talked to me about the new hardware launch, which is great. And then there's also a software component as well, because you were here a year ago.
Yes.
And you said sometimes you actually don't need the hardware because the software, it's Bluetooth enabled and it's in connected devices like a Google Home and Amazon Alexa and Apple Siri. How is that integration between hardware and software?
Yeah, it's a great question. So a few things that aren't super well known about Tile. One is that we have a community-find platform. It's basically the largest lost and found network in the world. And basically, if you leave your tiled item at a Starbucks, on a train, on an airplane, it gets found by the community. So we have an app mesh network of users that are helping you locate your things. The second thing is that our big focus is around embedding the Tile capability into third-party products. So we've announced about 6 or 7 different audio headset partners, and we've launched products with companies like Bose and Plantronics and Skullcandy and Sennheiser, and we're now looking at new big verticals like laptops and cameras and wearables, and anything with a Bluetooth device, and there's 30 billion of those shipping over the next 5 years, can be a Tile with just a software update.
We only have about a minute left.
Yeah.
How do you respond to some reports that Apple could be coming out with a competitor product? Do you see Apple as a colleague or a competitor? What do you do if that's the case?
Yeah, so Apple's been a great partner for Tile. The way that we think about the rumors around the competitive product is that it's really validation, right? We've been building this category for 6 years, and it basically illustrates that this is a real pain point. Of those 30 billion devices that are shipping over the next 5 years with Bluetooth, only about 4% of those will be Apple devices. So it's a big opportunity for the rest of the market.
Tile CEO CJ Prober, thank you for joining me. And that does it for this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology. Be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg.